Welcome back to Stocks Matter. My name's David, and this is going to be a stock market analysis for NASDAQ and ES. I was going to do a video yesterday telling you guys that this was going to be a good short because one thing that happened was during London, you swept this high right here. And from there on, I was anticipating that we would most likely sweep out to this low right here. And other than that, I'm not going to say anything else, but I will tell you what's going to happen within this week or the next week. So, monthly. We don't really have much on the monthly because right now this FVG is not considered one since this candle has not printed yet. And we still have 21 days until it can print. One note to have is consequent encroachment right here. That is the middle line of this wick, and it should act as some kind of support to price. So 27.26 is a good price to have labeled on your chart. Next thing, on the weekly, we have price that took out November's high, and now we swept through all that, and now we are looking a bit more bearish actually, considering we are still bullish. So what do I mean by that? We have on the 4-hour, we have price that has inversed this bullish fair value gap. So now we can use this as a piece of inversion. And from here on, we also have a fair value gap created up here. This being a bearish one. Now, targets to watch for. This low right here is a prime one. We have this FVG right here that can act as support, but on a daily we also see that it connects to the fair value gap right here at 21.264. So lots of momentum to be bearish. However, in context, this is still bullish. Like, we are still in a bullish market. There's no market structure break on the weekly and the monthly. We're still just cruising on up until we see something that happens on the daily or weekly. I don't really anticipate, like, oh, you know, stock market crash of 2024 before the Christmas rally type of stuff, you know. Let's draw a fib out. On the fib, we have equilibrium at 21,190.75. This would also realign into this fair value gap that's also left open, which also includes an inversion fair value gap, which also includes consequent encroachment of 21.08. So lots of confluence right here. This would be a very nice target to go long again if you're doing like options or some type of, if you want to sell puts. Other than that, I would kind of just wait out to go long until you see momentum hit on the 4-hour. And by what I mean by that is because ES right here, it's not showing very good signs of bullishness. I would say maybe within this week we see price can wait, let me get the brush out. So right here we can maybe go back up here, and then from there we could take out this low right here. This low is what I'm kind of aiming for this week. So, well, not it's not relatively equal to low, actually. It's just sell side. So from here we have sell side, but this sell side would fill in this fair value gap completely. So that would be very nice. On the daily, this would also hit an order block if possible. So right there, you also have more confluence building up. On the hourly, this low can also be attractive because you have this fair value gap right here that's left open. So you have a lot of fair value gaps that are remained open, and with that, it's showing a sense of bearishness on the lower time frames, but on the higher time frame, of course, it's still bullish. So just remember that you are still in a bullish market, but right now, short term, we are looking at more of a bearish stance. But yeah, with ES showing much more signs of just bearishness, I would anticipate tomorrow we maybe go up to here or in London, sweep out this high, come back down, sweep out these lows during the week. And then next week the Fed come in, order block, rips it higher, Santa rally, blah blah blah. And then after that, we see Trump in office, inauguration, and then they probably blame it all over him, and then they cause the crash. So that is what I am anticipating. Uh, one more thing to note: we have this volume imbalance. This volume imbalance is right down here at 50. Well, you can honestly just say at 6,000, but from 6,006 and all the way down to 599.75. So lots and lots of PD arrays to watch out for. We do have not a lot of data coming out. Tomorrow, we only have OPEC. We have CPI on Wednesday. That's going to be a big one. Core anticipated 0.3. And Thursday, we also have PPI and unemployment claims. So Thursday will be a bigger day. However, CPI most likely will also cause a move. But normally it's after CPI that causes the move. And then PPI with unemployment will be the bigger move, I anticipate. Friday, you don't really have much. Next week, though, I would see the Fed. And they are anticipating a cut again with a pause of only 14%. So most likely cuts will occur. We'll see how the bond market does with that. And that's all I have for today. Next video will most likely be after core CPI and PPI, most likely. So be on the lookout for that. But if you guys do like this, drop a like, subscribe, and I'll see you guys in the next one. Goodbye.